In focus is definitely Maruti. It was a swift March quarter for Maruti Suzuki. Net profit soared 48%, but some concerns on margins. I spoke with RC Bhargava of Maruti and asked him how he saw the future rollout.
You know, the commodity prices have remained benign this year. Our volumes have gone up because we had added new capacities. The exports have been going up and the foreign exchange situation has remained favorable. And this year, this is something which is not widely known, we had the maximum number of suggestions from our employees. We crossed 1 million suggestions which were implemented, and they gave us a profit of another 750 crores or so because of these cost-saving efforts. So all these things came together, and the result was what you have just mentioned.
Let me just talk about your margins. While, of course, the overall numbers look very robust, I wouldn't even say concerns, but I suppose higher expectations perhaps on margins, which have come in at 12.3%. I believe in the con call, the company has also talked about a one-time impact. Can you elaborate on that, Ms. Bhargava?
See, margins is something which I always feel a little hesitant about commenting, because many factors which determine margins are not within the control of the company itself. And if margins have gone up, you have to look at what's happened to the yen, the dollar, the euro. You have to look at commodity prices. You have to look at the non-operating income. So many factors which we don't control. And so it's good to see margins go up. What is more important is the efficiency of operations within the company, the factors which we control. I think the best any car company can hope to do is that in the areas which are within their control, how have they managed those areas? If the costs go up because the commodity prices are shot up due to some war, something, or some demand going up somewhere, or some mine closing down, it's neither a plus nor a minus for me.
So having said that, do you see as a forecast margins improving as and these revenues and these sales remaining as robust? I'm trying to understand if FY24 was just one of those lucky years, or you're seeing this momentum for a large company like Maruti sustaining.
I wouldn't like to comment on what margins would be in 24-25. All I can say is that in the areas which are within Maruti's control, we will try and do better this year than we did last year. But what the final result would be, as I said, depends on various factors which we don't or can't control.
Let me just get your sense on the dividend. Of course, investors will be very happy with it. It's a 40% increase in the dividend payout at 125 rupees, the highest ever. What was the thought behind this, Mr. Bhargava?
You know, we have a dividend policy, and this dividend which we have paid out actually comes to 30% of the earnings. We could technically, within that policy, have even given a higher dividend. But one of the considerations we had in determining the dividend amount was that it should be a dividend amount which we can sustain in the future also. Personally, none of us are happy with the idea that you suddenly give a big increase in dividend and the next year you can't give that dividend, you have to come down a little because profit levels have not been at that astronomical level as you had in the previous year. So we have kept ourselves a little flexibility, a little margin, so that we can sustain this 125 in the coming years, irrespective of what happens, at least this happens reasonably in this next year. And that has been one consideration. The second consideration, of course, is that if this itself is a 40% increase in the dividend, and if you give a very big dividend increase, then the shareholder tends to expect that in the coming years something similar will happen, which we may not be able to do at all depending on how the results come out. So we have tried to keep a somewhat balanced, somewhat sober approach to dividend and not gone overboard because profits jumped so much.
All right, there's a longer